Lesson 2: How to spot commercial and residential hidden gems. Use boots on the ground knowledge to outsmart all the other lazy investors. So now you know where to look for deals. How do you spot a property that no one else recognizes as a deal? Look for the properties with a problem that you can solve. Most investors look for a perfect, turnkey, ready to rent property that's going to immediately bring in cash flow. But smart investors look for opportunities hidden in the problems. Here's what to look for. In the residential world or the small multifamily space, look for overgrown yards. Look for the grass that is way too tall for that neighborhood. Look for boarded up windows, someone who hasn't taken the time to do basic maintenance or hasn't occupied the property in years. Look for outdated properties in appreciating neighborhoods. These could be old grandma and grandpa houses that they're just waiting for the right offer to come along to sell to the right person who wants to make a buck. Look for long term vacant homes. Those are everywhere where they've been on the market, no one can rent them out, and you can call the landlord who's literally got their number plastered on there to try and rent it out for a ridiculous price. And you can call them and say, "Have you thought about selling?" Next, look for absentee owners. Use a skip tracing tool, they usually cost a little bit of money, and contact them directly to find out if those absentee owners from out of state are willing to sell their properties. Now, let's talk about commercial. With commercial deals, you need to find underperforming assets, typically strip malls or retail centers or an industrial property where the owner has stopped caring about raising the rents. They're happy collecting their checks and they don't mind the fact that their tenants are getting a good deal on their space. Maybe they've mismanaged the property and it's out of disrepair and all the water lines are shot. Maybe the roofs are starting to leak and the tenants aren't too happy, but they're just paying the bare minimum rent to stay in it. Look for problems, look for vacancies, and you can find a deal. Look for a mismanaged multifamily property, high vacancies, deferred maintenance, bad reviews about roaches. All of those are indicators that a seller might be willing to make a quick deal to the right investor. Look for zoned residential that allows for multifamily development. If you have a single family asset that is on a larger parcel that is also zoned for multifamily, then you can take the home down, and put a larger two-story or multifamily duplex, triplex right on the same footprint and triple the rents with the same amount of loan that you would take out on the property to buy it. Look for properties next to new developments and infrastructures that are coming in. Other people have done the work to find out where they're going to build. Other people have done the legwork to figure out what the best properties are. Piggyback on them and try to find out where the growth is headed in your local market. And you can't do this in every market. You have to be specific about where you're going to look. It could be in one city, it could be in one state. In some places, it could be one city block. For example, in Florida, we have a lot of condos near the beach. And a realtor can go into there, learn all about what the condominium rules are, what's allowed for Airbnb, what's not allowed for Airbnb, what's allowed for renovations, what's not allowed for renovations. And you can farm that entire condominium and have an entire lifetime with the couple hundred units that are inside there turning over properties. Or you can have an entire city block that you know specifically about market knowledge where it's going and what's happening in that area, what parks are going in, and you can farm that area. There's opportunities if you focus. The secret sauce about zoning and value add is understanding your city's local zoning codes, because it could be possibly zoned in R3 that's sitting as an existing single family property. It could be legally turned into a duplex with just a small amount of rehab. That's a value add that no one else sees. And these are opportunities that you can get in on. Here's a quick example. A beat up duplex is in a rapidly growing area. Rents are 40% under the market value. The owner doesn't care anymore. The roof is leaking. The owners are out of state. And the lazy investors pass on it because it needs way too much work. You step in, you buy the property with hard money, you raise the rents up, you clean it up, you refinance it, and you double your equity in 6 months. That's how wealth is made. Now you could sell that property and claim the equity, or you could refinance, pay yourself back, and have a cash flowing asset as long as you did your numbers correctly. Here's a pro tip: when you're driving your neighborhoods, don't just look at the property. Look at who owns it. Look at how long they've owned it. Look at what's around it. If the area's got new builds and infrastructure going in, that old property sitting on it is future money. Let's wrap it up. The masses look for money. The wealthy look for hidden gems. So learn your market, learn what your zoning is, build the relationships with people who already have deals in the pipeline, and you'll start seeing what no one else does, which is opportunities on every corner.